Good afternoon, everyone. In today's video, we're going to start off by first taking a look at all of the stocks that hit our live scanner. This is going to be using our two usual filters, two time-based filters. I'll talk about that in just a second. Once we take a look at these results, really start to build a good fundamental basis of understanding what did volatility look like today. We'll then move on to discussing three specific ETFs. This is going to be XOP, the oil and gas ETF, XME, the mining ETF, and then XLP, the consumer staples ETF. All three of these markets are markets which appeared on our live scanner. For those that don't know what the live scanner is something we've built inside of our platform. This is our Stock Volatility Box platform, and it's empty right now, but during market hours, you'll see that this updates with a list of stocks. This is a scanner we've built. It updates every 15 seconds with new places where we have volatility trades setting up. Those volatility trades look like this. Just to give you a preview, that's when we've breached one of our volatility box zones. All right, so let's start off by first discussing what happened today, and then we can move on to these three ETFs. Now, before I forget, the two different filters, these are two time-based filters. The first filter is a stock. For it to be on this list as a number of trade counted, it needs to have been on our live scanner between 6:30 a.m., so that's when the market opens, and this is Pacific time, through 10 a.m. Pacific. That's when it needs to have been on our scanner for an entry. And this is, again, just using our raw models. Once we see something appear on the scanner, we then go and look for our oversold, overbought signal. So this is the first filter. The second filter that we're looking at is it needs to have been on the live scanner for at least 3+ minutes. And the reason we have 3 minutes, it's an arbitrary number, but it's the amount of time where, hey, if something appears on this live scanner, you can actually do something. You can add it to your dashboard. You can then see the levels. You can come into your charts. You can take a look at what the trade looks like and actually do something where you can take the trade. It's enough time, just enough time at least, where we can start to consider those trades. What we don't want to see in this count, which is excluded with that 3-minute figure, is trades where we had something hit our entry and then quickly bounce from there. This isn't a trade that we could really take advantage of. Sure, it appeared on our live scanner, probably for say a few split seconds before we hit the target. That's what we're excluding in this count. So these are all realistic trades between that time filter. Inside of that, you'll notice we have two different sets of models. We have aggressive and conservative. And inside each of these models, we have long and short. So using our aggressive longs today, you'll notice we had 78 trades. This was our lowest win rate today, 39%, so just shy of 40%. Usually we're used to seeing this number closer to the 60%, as you can see down below. Our P&L here, though, despite this low rate of just below 40%, was still a positive 2.77 across all 78 trades. And this is again using a one share count. Of course, using the percentage here does a better job, but as long as we see this number above zero, that gives us the idea that this model for the 78 trades for the most part was overall a net winner. Now, if we move on to the aggressive shorts, you'll notice 80 trade opportunities here, 60% win rate. This is more of what we're used to seeing with the raw models. A $5.32 P&L, the highest P&L for today. But one thing I'd like to point out here is our conservative shorts are trailing not too far behind at $4.99, but it took far fewer trades to get there, just 17 trades. And you'll notice the efficiency here in terms of our probability, much higher as well today, 77% using the raw models. Also something we're not used to seeing, just to preface on the other side in terms of our aggressive longs. That was a little too low. Conservative shorts, a little too high as well. 60% is that usual equilibrium. We then overlay our overbought, oversold indicator in the edge signals to increase that number closer to that 75% mark. Today, the conservative shorts were above that using the raw models to begin with. And if you use the edge signal on top, I think you were pretty much unstoppable today using our conservative shorts. All right, so now that we understood this from today, the real takeaway here is our conservative models, especially during the past few days with the sell-off, have been the better models, the ones that have given you a better winning percentage. And that, of course, just makes sense logically speaking, considering that the conservatives are at a place where you're being more cautious, you're waiting for a better entry price, and as a result here, you're seeing better P&L percentages. All right, now let's move on to the three different ETFs. We'll start off with consumer staples and then make our way down. So inside of our chart, I have XLP loaded on. I have both volatility boxes loaded, but the only one you can actually see in the frame right now is our aggressive volatility box. Now let me first walk through when you see it on our live scanner. That's when we have price action breach. And today that was 9:42 a.m. Pacific. That's when price action breaches our volatility box clouds. That's when you'll see it appear on this live scanner. Now once it appears, you can add it to your dashboard where you can then start to see the levels really inside of your platform, just like this. Or you can also come into the indicator page and generate an indicator file so you can see it inside of your platform, just like this. Now, once we have step 1, which is a breach, we're looking for step 2, which are these two red arrows. Those are our oversold, overbought indicators. In this case, our overbought indicators, letting us know that, hey, we're officially in overbought territory. We're also inside of our volatility box. The trade's a go, and we're looking for a move towards our target, which is this gray target line. That's pretty much what happened. And from that target line, you'll see we really didn't see much more in terms of a move down lower before price action reversed, and XLP, if I zoom out, closed, pretty much went outside of the clouds, but then closed right inside, right ahead of our gray target line right here. So that's our trade in XLP. It was a short opportunity right here where you had a breach along with an edge signal. Those were our two rules being met. We had to move to the first target, and that was all you got. Usually, if we do see a runner, we like to have a break-even stop targeting the other side's gray target line for, say, in this case, a short. And for a long opportunity, you'd be looking at this target line for your long. But here you'll see XLP. The buyers came right back in once we had our move to the target line. Came right back in, drove it outside of the clouds before you saw just some profit taking into the close. All right, next up, if we move on to XME, in XME, we really had 3 different trades that set up. The first trade was a short opportunity in the morning. This was using our aggressive models, real time for anyone who was looking. We had price action breach our clouds, you had the edge signal, and then you had a nice reversal where you hit our T1. You then had a retest where any remaining shares were taken off at break even. So unfortunately, you didn't get to participate in much of this move if you followed the trade plan rules. But you then did see that stretch move, so much so that you hit our aggressive long entry as well. So now you appeared on our live scanner for a second time, this time as the aggressive long. You had price action breach. You had multiple green arrows signaling you're officially in oversold territory. You then hit that target as well before the remaining shares here were taken off at break even before you made a move to the other side's gray target line. So far you had really 2 different trades, one short, which hit just your first target, one long, which hit just your first target, both using the aggressive models. Then, as the day progressed, price action here broke outside of our aggressive clouds, and we then breached our conservative clouds. In fact, we went a little deeper inside of our conservative clouds, and then we had the edge signal finally let us know that we're now officially in oversold territory. Now, before we take a look at T1, T2, take a look to see where price action breaches the clouds. You have the edge signal and how that looks like in terms of the reversal point for today as you had really the final activity into the close. That's pretty much as picture perfect as you can get, and this is what we're looking for with conservative entries. We're looking for these nice reversals where you make moves not only all the way up to its target line, but then eventually up to, say, the aggressive volatility box's target line as well for that same stock or ETF in this case. And then if you can see really a strong move with, say, buying or selling, you get a move to the other side's, in this case, aggressive target line as well. So that's how we can read XME. XME was better in terms of that final trade with the long opportunity. You had the edge signal. You had an opportunity to enter. We hit that gray target line. You then had really a nice move up. You chopped around sideways here at the target line before you then started to make a move towards the aggressive long in the nice ebb and flow that we're used to seeing. And then finally, let's move on to XOP, and that's the final ticker that we have. This should look similar to XME as well in that we went outside of our aggressive, and in this case, conservative clouds as well. Let's break down all of the trades in XOP. So starting off in XOP in the morning here, we did not have that same short opportunity that we did in XME. This was not a real short, real time if you're looking at your charts. It only looks like that looking backwards after we saw this really nice sell-off in XOP. Now the one trade that we did have trigger that met our rules was a conservative long, and that trade was a stop out in XOP. But let's take a look at both models here to take a look to see what actually happened here. Let's start with the aggressive longs, where first off, we had price action breach our volatility box clouds. This is when it appears on our live scanner. We then had to move to our target line before seeing that overbought, oversold indicator, in this case confirming our oversold move. So we didn't get to participate in this. It did make a move to the target. It did count as a winner, especially when you're looking at the P&L numbers from before, but it's not a trade we were able to participate in. Now, after that, we had price action here start to chop around. We then broke outside of our aggressive models, went all the way down to our conservative models. So in fact, let me remove our aggressive study here. So if I remove that, that should make things a bit easier and cleaner. We then breached our conservative clouds here. Now, once we had the edge signal, we had an opportunity to enter the clouds as well. We ended up going inside of the clouds and then continued to go outside of the clouds a little bit deeper than we would like. We triggered the stop before you saw what ended up being a nice reversal in XOP. So this ended up taking us out right here, going outside of the clouds, really beyond that 80.75 mark. We went all the way down to 80.31 for those of you that were willing to tolerate that heat, given that it was an ETF, before you had price action reverse. And so that's XOP. So now you have the idea of a loser here in XOP. We also had multiple winners in XME that we discussed. And then we also had the aggressive short in XLP that we started off this video discussing. Hope this helps to give you an idea of not only today's volatility regime with what we saw with our 4 different entries, the aggressive long shorts, along with the conservative long and shorts, but also 3 different ETFs, what they look like both winning and losing trades. Take care, everyone. Good luck trading, and we'll see you in the next update.